Alright guys, listen up here. I'm going to tell you the main reason as to why you are getting stopped out of all of the trades that you're taking. I know it can be frustrating at times when price stops you out and then goes to your anticipated drawn liquidity, because it has happened to me countless amounts of times before I understood this one concept. And that one concept that has led me to actually understanding where protected highs and lows are is SMT divergence. Now I'm going to show you guys a trade that I took today live with my Discord, utilizing the concept of SMT divergence that assisted me in my stop loss placement and my daily bias. So let's get right into it. All right, like always, what do we start off with? A blank chart here. We have Euro, we have GBP, and the dollar index on the right. Now, these are daily charts. Now, I want you to mark up your annotations before I show mine on the next slide. So I did something a little bit differently here. I know that usually I'm marking off internal range liquidity pools and old highs and lows. This time I'm just marking off significant highs and lows because I'm trying to identify where our SMT divergence is. Now, if you see here, we have a resting high here, a resting high here, and a resting low here. Now, notice the difference between all three of these correlated and inversely correlated pairs. You could tell that Euro dollar and GBP dollar both did not run this resting high, making a lower high. But you can see that on the dollar index, we made a lower low. And that is SMT divergence between dollar index and the two majors, because these are supposed to be inversely correlated. A correlated market would be Euro dollar and GBP dollar making a higher high and dollar index making a lower low. But since there is a cracking correlation at these resting highs and a resting low here with dollar index, that is identifying weakness in the majors and strength out of the dollar index. So since I identified my SMT divergence, I'm going to now label this swing high that we created the previous day as a protected high because we created SMT divergence there. Now here is our SMT labeled off in annotations, but I also wanted to give a little snippet of what news we had today on Tuesday the 17th. At 8:30 in the morning, we had core retail sales month by month and retail sales month by month. So this news was going to be our liquidity and volatility injection into the marketplace, giving us either a Judas swing or a directional move to a draw on liquidity. So now let's drop to the hourly chart and monitor that reaction after our SMT. So just like I did on the daily, I want you to do the same thing on the hourly chart. Mark up your annotations before I show mine on the next slide and see if our minds are both thinking alike in regards to this price delivery. Now, this is in alignment with my forever model and the structure that we have forming here. The only thing that is missing here is a tag of an internal range liquidity pool, but we're just using external range liquidity as a part of the checklist. Now you can see here, what is this starting to look like right now? This is looking like a power of three move. We have an accumulation resting here with a manipulation that's creating SMT divergence on our aligned higher time frame with an hourly change in state of delivery with our news release that's happening at the next hourly candle here. So we have the 6 a.m. candle that closes below this up close candle that swept liquidity. So this is our change in state delivery / order block, and price trades back into it and does the same thing on GBP USD. We run resting highs, these short-term highs, up close candle that runs liquidity, creates our daily SMT, and price closes below the opening price of that, creates an hourly order block and a change in state of delivery. Same thing on the dollar index. We run short-term lows, we create a lower low, just like how we created lower highs on the majors, have an accumulation manipulation lower, closing above this down close candle that swept the short-term low, retagging it, labeling a change in state of delivery / order block right before our high impact news. So let's see and fast forward price as to what happens at our 8:30 news release. Now, like I depicted in the forever model, you can see what happens when price reaches into that POI. It's very sensitive and aggressive, and we displace lower on both Euro dollar, GBP dollar, and displays higher on the dollar index. Now we're going to be using 3 aligned timeframes here. We have a daily narrative because our daily created our higher time frame SMT, and we're looking at structure on the hourly chart, and now we're looking for an execution on the 5-minute chart. So we're going from daily to 1 hour to M5. So we're going to see what happens after news comes in at 8:30 and how we could potentially frame a short to any resting sell side liquidity pool lows because our hourly is depicting us for lower prices on majors and higher prices on the dollar index. So just like I did on the hourly chart and the daily, I marked up my annotations just like how I wanted you guys to mark them up before I showed mine. Now do the same thing on this 5-minute chart, but look at what happens when 8:30 news comes in, and look at significant highs and lows when news comes in at 8:30. Now pause the video before I show my annotations on the next slide. Now, if you marked up your annotations properly, you can see what happens at the news release. You look at euro dollar here. We run a short-term high at the news release at 8:30. We create SMT divergence with GBP USD. We do not run that same correlated high at the news release. So what is that telling me right there? That's telling me that we already ran the resting buy side liquidity pool above here because of our SMT. Now it's depicting that this is a protected high. So if I wanted to go short, I'm going to look for any resting sell side liquidity pool lows that are still intact on both correlated assets, and I'm utilizing that as a draw on liquidity. And look at also the dollar index. What does the dollar index do? Makes a higher low, while euro dollar makes a higher high. So we had weakness out of both GBP and euro dollar. Now we have weakness and strength out of both EU and dollar index. But we have both weakness on the daily time frame and now weakness on the M5. So if I'm going to prioritize any sort of short, I want to short the overall weaker pair. So if I'm going to frame any sort of low draw on liquidity and a short trade, I'm going to prioritize a trade on GBP USD. And I'm going to go into this knowing that the high that was created at 8:30 with news is protected because of my SMT divergence. Now, only showing euro dollar and GBP dollar, we have same correlated lows that have not been swept after our news release. And if you know, in a market maker model, when we create a run on liquidity, this is a run on sell stops, this would be considered our distribution. When price is displacing in the direction of our drawn liquidity with a labeled stop hunt and SMT divergence, we are now looking for another entry, which is redistribution to our sell side liquidity pool lows. So all I'm doing here is simply marking off any bearish PD rays that would be respected for a continuation lower to capture an opportunity to capitalize on the tag of this sell side liquidity pool correlated lows. And as you can see here, we have GBP USD coming up and tagging that M5 bearish fair value gap, but we have a failure to do so on euro dollar. So with this in mind, and knowing that we tagged this gap and we failed to tag the gap on euro dollar, this is leaving me the idea that this is a breakaway gap, because again, when price on a correlated asset runs a high or tags an imbalance and the other fails, that is a label of price already running liquidity and not needing to go back up to that point of interest. That is what creates breakaway gaps. Now, what I did here is when I was live trading with my Discord, I alerted a short on GBP USD with the tag of this M5 bearish fair value gap, but I put my stop loss at the consequent encroachment of this M5 wick, because if I used the entire wick, that would have been too big of a stop loss for me to then at least get a 1 to 2 risk to reward. But in this case, what I was looking for was a 1 to 1.75 risk to reward short on this trade for GBP USD short. And as you could see here, when price played out and we continued, it was a bit of consolidation, but it's okay because we still had this M5 gap left open on euro dollar while just making higher highs on GBP USD. So I was very confident in the fact that this was still going to go lower, because all we were doing here were just sweeping more and more sell stops in the opposing direction of our draw on liquidity. So I was able to hold my position with utmost confidence and know that price wasn't going to reverse on me as long as this gap remained opened on euro dollar for us to then take me down to my resting sell side liquidity pool draw liquidity. Here are the alerts for the finishing trade. and the draw on liquidity that was met for the dollar index in opposing to euro and GBP's price movement. But this entire process was done live in front of my Discord. And if you want to join and you want to watch me trade live and see price action print, I will leave a link in the description of this video. But I hope you guys enjoyed this video. You learned something new. Utilize this and bring this into your arsenal for trading live price action. But take it easy, guys. Good luck, good trading, and I'll catch you guys next week in the next upload.